Welcome everyone, and thank you for joining to today's webinar, Learn How to Apply for the PPP Loan Forgiveness. This webinar is presented to you with our great support and in collaboration with Mercer County Office of Economic Development. My name is Lilian Mauro. I am the Regional Director for the Small Business Development Center at the College of New Jersey. And what we do is we provide counseling, training, and technical assistance for existing businesses and startups. We are part of a network of more than 1,000 centers nationwide and 12 of them in the state of New Jersey. Each center covers a specific area. Our SBDC at the College of New Jersey covers Mercer County and its 12 municipalities. We have a great team to serve the business community, and all programs are presented to you by highly qualified specialists, government representative, experienced and knowledgeable business owners, and private consultants. All of them can help you to overcome the challenges that you may experience daily operating your business. We provide one-to-one counseling at no cost to you, and also throughout the year we offer no-cost and low-cost training sessions to learn more about running and growing your business. Our areas of expertise include, but it's not limited to, business plan, marketing plan, website development, social media, procurement, international trade, retail, wholesale, manufacturing, QuickBooks, loan package development, and many more. If you would like to get more information, you can also visit our website at www.sbdcnj.com. And today, we also are working in collaboration with our two sister centers, the SBDC at Northwest. Mary Adelman is the Regional Director, and also Jacqueline Mejia Fuertes, Regional Director for the SBDC at Brookdale. So if you are in Mercer County, please, you can reach out to Mary Edelman or Jacqueline Mejia Fuertes. Thank you for joining us. We are also funded by the Small Business Administration, Business Action Center, Mercer County Office of Economic Development, the College of New Jersey. We also welcome this year our partner UCDC and Regional Business Assistant Corporation. With this, let me introduce you to the business advocate, Darren Stewart from Mercer County Office of Economic Development.
Thank you, Lillian. Good morning, everyone. On behalf of the County Executive, Mr. Brian M. Hughes, I would like to thank all of you, along with our Director, Mr. Anthony Carabelli Jr., and our partnership with the Small Business Development Center, and providing this presentation on the learn how to apply for the PPP loan forgiveness. Let me tell you a little bit about our office and what we do here at the Mercer County Office of Economic Development. We field and assist all business-related questions. We assist the business directly or indirectly through our network of federal, state, and local partners. We maintain relations with the current 12 Mercer County municipalities and their specific partnerships. Let's see, the programs that the county has that's available to everyone here in Mercer County. We have a business counseling program through the Small Business Development Center. We have a new lending partnership with the UCEDC, which is for small micro business loans. The Mercer County Office of Economic Development is also in partnership with the on-the-job training grants through the Mercer County One Stop, which is located in downtown Trenton. We also have a foreign trade zone guarantee program. We have free site selection services, which is any type of commercial facilities that any size that you may be interested in obtaining. All you have to do is give our office a call, and we can try to find a facility that's suitable for you with all your specific needs. And we have the Mercer County Trade Name Certificate Program. Let's see the next. If you have any questions, you can give myself a call or either our director, Mr. Anthony Carabelli Jr. The telephone number here at our office is 609-989-6555. Again, the director here is Anthony Carabelli, and I am the Mercer County Office of, I'm the business advocate here for Mercer County. And I will now present to you Ms. Erika Pearson. She is the Lender Relations Specialist with the Small Business Administration here in the District of the New Jersey District Office. Erika?
Good morning, everyone. Thank you very much for attending today. Let me just show my screen here. Bear with me. Okay. Thank you to the SBDC offices that put on the seminar today. It's going to help us get the information regarding the PPP forgiveness program out to everyone. I know we have lenders and we have the business owners both on this call today. So keep in mind that the when it says business owner or lender, so you know which person we're talking about in this presentation. It does get into the meat of the PPP forgiveness, so take notes. We're doing an introduction to the PPP forgiveness, but it does get kind of technical, so bear with me. Includes guidelines and guidance that you can see on SBA.gov or Treasury.gov. You're responsible for personally reviewing these documents and determining if you're filling out the paperwork correctly. Now, if you need personal assistance regarding your specific business or your specific situation, you can, in the chat box, you can put a request for assistance from the SBDC offices, and they will be more than happy to get back to you and to answer your specific questions. Because of the size of the group of people that are joining us today, we will not be taking presentation questions. I apologize for that, but the SBDC is set up perfectly to have you contact them, and they will get back to you with any questions. What we have found is that once the presentation's over, a lot of the stuff that you may have questions for now have been addressed. Okay, as far as the SBA resources and links are concerned, there's idle applications out there. The New Jersey District Office, if you have questions on the PPP loans, that's our number. If you need other district offices, that doesn't really apply today. And if you're looking for content regarding forgiveness applications, you go to SBA.gov and also Treasury.gov. All right, the Paycheck Protection Program Flexibility Act as of 6/5/20. There are 7 key changes at our last update. Now, this is not the one, the president just extended it again, this program, but there were no program changes. So this is still the last one from the last section, the last approval from Congress, okay? And what it did, the changes is it extended the covered period for loan forgiveness from 8 weeks after the loan disbursement to 24 weeks. If you're at the 8-week period and you need to have 24 weeks in order to spend the rest of your PPP money before you ask for forgiveness, you can convert over to the 24 weeks. You just discuss it with your lender to make sure they know what your intent is. The changes also lower the requirement of each business owner to have 60% of their PPP loan just be for payroll. It used to be 75%. So 60% of your loan that was dispersed needs to be used for payroll in order for it to qualify to be deferred, okay, to be forgiven. If you don't spend the full amount of your PPP loan, and there's a part of your loan that was not forgiven, the balance of those, the balances of what's left there does become a loan, and it's amortized over 5 years. Okay, the changes also provided safe harbor options. When you apply for forgiveness, it's possible that you have your forgiveness reductions due to changes in payroll. We're going to go over all the details on this, but these are just a review of the questions. Also, the option 2 was to address the reduction in loan forgiveness based on full-time equivalent employees. The maturity went from 2 years to 5 years. Actually, the 5 years is for loans closed after June 5. If you were approved before June 5 and you're on the 2-year plan, you definitely need to have to go to your borrower so that you can mutually agree to change the terms, because your paperwork right now would say 2 years. So contact your lender and make sure you get that clarified. The changes extend the deferral period. So your payments on your PPP loan are deferred until the SBA remits the approval for your forgiveness. Okay, and we'll go over when that happens. But when the SBA says you're forgiven, that's when the deferral period ends. If there's anything that was not forgiven, that's when your loan will start to amortize. Okay, keep in mind that if you don't apply for loan forgiveness, the deferral period ends 10 months after the ending of your covered period. Okay, and that does not say that on the screen. It's incorrect. Remove the restrictions of participating in deferment of Social Security payroll tax. You can now defer the payroll tax through December 31st and pay half the balance in December of 2021 and the other half on December 31st, 2022. Okay, in order to calculate your base numbers that you calculated your full-time employees on, you used, I believe, a section of time in 2019 versus 2020. We'll go over those details. If you're a seasonal business, changes did allow seasonal businesses to use the 12-week period under where they're most accurately reflects when they are working. So for instance, a surf shop wouldn't get much income from December through February, but June through August they do. So that's their period that they're going to compare what they did last year versus what they did this year. Okay, the overview. Okay, if you have an EIDL loan, that's the economic income disaster loan. I think it's and that is one loan that was directly from the SBA. If you had received one of those loans, you also received an advance. It's usually $1,000 per employee is what it had been changed to. If you have one of those loans and now you're getting a PPP loan, you cannot refinance the EIDL loan with PPP funds if the EIDL loan was received between January 31st or before January 31st or after April 3rd. Mm-hmm. You don't have to refinance your EIDL loan when the funds were received between those dates, January 31st and April 3rd, and if the EIDL loan was used for purposes other than payroll costs. Now, this next section is grayed out because there's a lot of confusion as to how the EIDL loan advance affects the PPP loans and the PPP loan forgiveness. That we are going to get more clarification coming out shortly, and how to calculate those numbers in regard to your EIDL advance. Sometimes with the EIDL advance, they adjust your forgiveness. So don't panic. We're going to get clarification on that so that we can all make sure that we're doing things correctly. Your EIDL grant money received does not need to be repaid. regardless of whether you took the loan or not. Okay, enough of the EIDL loan. When can you apply for forgiveness? You can apply anytime after you use up your loan proceeds. You can apply on or before the maturity date of your loan. You can also apply during your covered period if you have used all of your loan proceeds for which you're requesting forgiveness. So if your 8 months, your 24 weeks rather, is you run out in week 12. So if you have a 24-month period and you run out of money on week 12, you can apply right then for your forgiveness. Just to give you an example, this will also help keep the flow down for the volume of forgiveness applications that are going to come into your lenders and the SBA. So the sooner the better, but you don't have to do it then. You can do it up to the maturity date of your loan. All right, to apply for PPP, this is the revised loan forgiveness application. They reduced it to 5 pages. The information you can get it at sba.gov, or you can also get it on treasury.gov. They have the application on there and instructions. There's 2 different documents. The information you'll be sending to the lender is your PPP forgiveness application with the calculations, the certifications, and Schedule A. What you need to keep for records is Schedule A worksheet, your borrower, your demographics, and the instructions. There is an easy form for forgiveness, but it's limited to who can use it. If you're self-employed and business and have no employees, or the salaries and wages of your employees, if you do have them, were not reduced more than 25%, and the number of hours of their employees were not reduced. So that's a hard one to meet because of what we're all experiencing. Or if you experience reduction in business activity as a result of any directives from federal, state, or local agencies, and you did not reduce the salaries and wages of your employees more than 25%. If you don't meet one of those 3 guidelines, then you need to fill out the longer form. And to the lender, again, the application, certification, and your demographics and instructions you keep. Okay, the business documents that you need to complete the application. You need a calendar, a calculator, all of your loan documents, business records that you're using for applying. You're going to want to keep those records. You need to keep them for 6 years. And in 6 years, you're probably going to wonder what I did. I know I would think that a month later. So I can imagine after 6 years what I would remember. And then patience. Please have patience with it. However, your SBDC offices are more than happy to help you answer any questions on the applications. Okay, there are 2 payroll periods. One is called the covered payroll period. The other one is the alternative covered payroll period. The covered period is the period that is 24 weeks from your loan disbursement date. I'm just going to use the 24 weeks. Okay, I'm assuming that if you're using 8, it's 8. It's just making it less confusing that way. So the covered period is the 24-week period, 168 days from your disbursement date. The alternative covered payroll, covered period, okay, alternative payroll covered period. This is to help businesses that close on their loans and get the disbursement, but it's in the middle of a pay period. So for instance, the first day of your first pay from the disbursement date is, let's say, Monday, April 20th, you close. The first pay date is April 26th. Your alternative payroll covered period goes from April 26th through October 10. And then you can finish up your payroll period. It's to help you. Let's say you're doing bi-weekly payments and you get the disbursement in the middle of your pay period. This allows you to cover that pay period within your 24-week time frame. Okay, that way it's not as big of an issue now because a lot of people are using up their loans before the 24 weeks, but it is available to you should you need the full 24 weeks and you still need to cover a pay period with your loan. Okay, the required full-time employee are your FTE calculations. Okay, loan forgiveness may be less if your weekly average of full-time employees was less than your payroll period. Okay, so you need to calculate how many full-time employees you had. You would assign 1 to the full-time employees, and then you would take and then you would have a percentage of 1 for your part-time employees. So you're either going to use one of 2 calculations to convert part-time employees to full-time equivalent. You would take the average numbers of hours per week, divide it by 40, and round up to the nearest 10th. That would be a max up to 1, because 1 would be a full-time employee then. Or, which is easier, simply assign 1.0 employees for those that work 40 hours and 0.5 for employees that work fewer hours. So if you really want to get detailed and say, well, I have a 0.75 employee and a 0.25 employee versus 2.5 employees, you can feel free to go at it. Okay, costs for eligible forgiveness. What is a payroll cost? Payroll cost consists of compensation to employees in the form of salary, wages, commission, similar compensation, or wages or similar compensation, cash chips are the equivalent. That's what they consider the compensation to employees. It also consists of payment for vacation, parental, family, medical, or sick leave. It allows for separation or dismissal, group health care coverage, including insurance premiums and retirement, and all payment of state and local taxes assessed on the compensation of the employees. Now, biggest question is, hey, I'm an independent contractor, sole proprietor, it's just me. What do I use for income? You would use your wages, your commissions, your income, or your net earnings from self-employment or similar compensation during the time of the COVID-19, your covered period. That would be it. Yeah, you would look at that, of course, in conjunction with what you used initially to determine what your income is. So hopefully I didn't confuse that. If you have questions on that, again, just contact SBDC. Summary of eligible payroll costs. Payroll costs that incurred during your covered period. Payroll costs are considered paid on the day the paychecks are distributed or when you originate the ACH credit transaction. Payroll costs are considered incurred on the day that the employee's pay is earned. Payroll costs incurred but not paid during their last pay period are eligible. We kind of just went over that. For each individual employee, the total amount of cash compensation for forgiveness may not exceed an annual salary of $100,000 as prorated over your covered period. And you account payroll costs that were both paid and incurred only one time. Do not double dip on that. Okay, for non-payroll costs, this is your mortgage interest. This is the 40% of your loan that you can use and still be eligible for forgiveness. A lot of people ask, well, you know what? I'm using more than 60% of my loan for payroll. Is that okay? Absolutely, it's okay. The intent of the loan was to keep your payroll going. You can use up to 100% of your loan for payroll and document it for payroll and you're done. But if you can't seem to, you need to have some of those funds, and you need to use that 40% to cover mortgage obligations, rent, and utilities. Of course, you can use it for that and still be eligible for forgiveness, rather reimbursement. So for the covered mortgage obligations, this is payment of interest on any mortgage obligation on real estate or personal property that was in place before February 15th, 2020. I always give it as a guideline. If you're claiming it on your taxes for 2018, 19, that would be an interest obligation that you can use as a covered mortgage obligation. Covered rent obligations, this would be, business rent or lease payments that were in place prior to February 15. And covered utility payments, that would be electricity, gas, water, transportation, telephone, or internet access. All has to be in service prior to February 15. Non-payroll costs must be paid during the covered period, incurred during the covered period. It can be paid on or before the next regular billing cycle, even if the billing cycle is after the covered period. So your expenses have to have been incurred during your covered period. And you're allowed to pay them with the next billing cycle after your current payment period, after your current, you can pay your expenses after your period, as long as it's the next due date for your expenses. Okay, hopefully I didn't confuse you on that. Non-eligible payroll costs cannot exceed 40%. We discussed that. You can only count non-payroll costs that were both paid and incurred only once. Okay, frequently asked payroll questions. Are salary, wages, commission to furloughed employees, bonuses, or hazard pay during the covered period eligible for forgiveness? And the answer to that is yes. Yay! Are advance payments of interest on mortgage obligations eligible for loan forgiveness? The answer to that is no. There is no look-back period, so you can't cover mortgage payment interest prior to your disbursement date. Sorry about that. Okay, the documents that are required. Proof of payroll documents for submission to the lender. Please excuse these slides. There's a lot of wording on them, but we wanted to include the wording from the actual directives. This way you have all the detail at your reference, easily at your reference, okay? All right, so payroll. You can use bank account statements or third-party payroll service to show that the compensation was paid to the employees. They're also looking for tax forms, payroll tax filings, state quarterly business, and individual employee wage reporting and unemployment insurance. That is all said in that slide. So if you're taking notes, it's written there. Payment receipts, okay? Documenting the contributions to health and retirement plans that were used in the forgiveness calculation. So you have to have receipts or proof of payment that you actually made these payments to your employees. On the EZ form, it's all the same as far as documentation is required. And again, it's bank statements, tax forms, payment of receipts, and documentation of the average number of full-time employees or payroll employees during the covering period. That last period is specific to EZ application. Okay, documents for submission to your lender. You need the average number of full-time employees between you're going to compare it, okay, between your reference period, let's say between 2/15/19 and 6/30/19, and then between 1/1/20 and 2/29/20. So you've got two pay periods, 1/19 reference periods rather, one in 19, one in 20, or of course, if you have a seasonal reference. The payroll, federal payroll tax filings and reported will be reported to the IRS. They'll need to see your 941. State quarterly business and individual employee wage reporting for and unemployment insurance tax filings, and documentation. Documentation can be submitted. It can cover a longer period than the specified time frame that you're looking at. So you don't have to have the documents exactly from January 1/20 to 2/29/20 as a reference point. It can cover a longer period, you know, because most people report things in quarterly. So it can include quarterly statements. For non-payroll payments, that's the 40% of our loan. For mortgage interest, they want to see a lender amortization schedule and receipts that the interest was paid or canceled checks. You can also use the account statements from 2/20 to 1 month after the covered period. For rent, they want to see a copy of the current lease and receipts that were paid, or a lessor statement from your landlord covering 2/20 to 1 month after your covered period, verifying that the rent was paid. And then for utilities, invoices, again, from that February of 20 through your covered period. For utility statements, they want to see the actual statements for the utilities and the receipts that you paid them, whether you paid canceled check or if you went there and paid it in cash and they gave you a receipt. However you paid it, they want to see how you paid it. Record keeping, we touched on this earlier. You're required to keep your records for 6 years. These documents are not to be submitted to your lender. You want to keep them in your documents. For employees, you want your documents supporting the list of each employee and salary / hourly wage reductions. Document those that are earning over $100,000. You want to keep your documentation of proof of job offers and refusals, firings, and hirings. We'll go over the job offer versus unemployment, $600 making too much money to come back and you can't get your employees to come back. We'll go over that in a little bit. You'll need supporting certifications that you were unable to operate between 2/5/15 and the end of your covered period. That you were not able to operate at the same level that you were at prior to 2/15. Due to compliance with established guidelines by state, So you're proving that you weren't able to operate at the same level as you were working prior to 2/15 due to the guidelines established by state, local, and federal governments established between March 1 and 12/31. Include copies of applicable requirements for each location and relevant financial records. Okay, so you want to keep, I guess you would go to a website and show what the directives are, so you can show what the directives are specifically for your state. We're really talking to a lot of people right now in New Jersey, I believe. But if you're out of state, you definitely want to go by your state regulations. And you want to keep the documentation that you use to support the Schedule A worksheet, which is your full-time employee reduction safe harbor worksheet. Okay. Okay, the application. Full-time employee reduction, safe harbor, option 1. You are exempt from the reduction and loan forgiveness based on your full-time employees if you reduced your full-time employee levels in the period beginning February 15th, ending April 26th, and you restored your full-time employee levels not later than 12/31/20 to the employee levels and their pay period that included February 15. So that's one safe harbor. that you won't have to worry about having your forgiveness reduced. The second safe harbor, you are exempt from the reduction if the business owner in good faith can document that you are unable to operate your business due to compliance requirements from federal, state, and local government issues. Oh, you know what I'm talking about. Federal, state, and local government mandated issues. Okay, and that's between March 1 and December 31. And the requirements definition is listed on that bottom, and it's like for Secretary of Health and Human Services, Director of Centers of Disease Control, that sort of people that are mandating that you cannot operate. The reduction exemption for full-time employees. You could be eligible for an exception if you are unable to hire individuals who were employees on or before February 15, or you are unable to hire similar qualified employees for unfulfilled positions by December 31st. So again, a lot of employees, there was a request to send out to the borrowers in writing, to the employees in writing, requesting that they return to their job and proof that the employee turned down your offer. If you made a good faith written offer to rehire employees during the covered period and it was rejected by the employee, and the offer was for the same wages, same number of hours, it was rejected by the employee, and the employee has maintained, you have maintained records documenting the offer and its rejection, you will be exempted from the full-time employee reduction. Okay, so to put that in English, you want to document that you sent your request to your employee, they came back and said no. You don't have to worry about what unemployment was doing with people that said no, I'm not coming back. That's a state issue. As far as this is concerned, it's a federal issue, and we're only concerned as to whether they said no to you or not whether they were reported as saying no and it affected their unemployment insurance. So that is a state issue. Frequently asked questions. What effect does the business owner's reduction in employees' salary or wages have on the forgiveness amount? If your reductions are in excess of 25%, this will result in a general reduction of your loan forgiveness amount. Your calculations are performed on a per employee basis, not an aggregate. Second question, how should business owners seeking loan forgiveness account for the salary wage reduction based on a reduction in the number of employees? The salary wage reduction applies only to the portion of the decline in employee salary and wages that is not attributable to the full-time employee reduction. Okay. Last question, what effects does a reduction in business owner number of full-time employees effects have on forgiveness? You must first select the reference period. We talked about the reference period. And that will show the compensation between your full-time employees. If the average number of full-time employees during the covered period is less than the reference period, the total eligible expenses available for forgiveness is reduced proportionally. For example, if you had 10 full-time employees during the reference period and a decline to 8 full-time employees during the covered period, the percentage declined by 20%, thus only 80% is available for forgiveness. That should pretty much explain that and make that a little clearer for you. Okay, the application process. We are almost done, so hang in there. I know this is long, but I told you it was going to be meaty. The loan forgiveness process. The business owner submits the loan forgiveness application to the lender. Remember, that's when you've used up your funds. The lender has 60 days to issue a decision to the SBA. That's to, of course, accommodate volume. This SBA has 90 days to review and determine if you're eligible for forgiveness. Now, keep in mind, that's a combination of 5 months. So when you submit the application, you can start inquiring about the status after 5 months has passed. Because if it gets done sooner, it's very possible it could get done sooner, as to depending on when you applied. However, it can take up to 5 months. And I know that's a killer, but you are deferred on your payments until then. But keep in mind that interest continues to accrue during the deferment period. That's also a very big question. Once the SBA has notified the lender is responsible for notifying the borrower. So where you call for your status is you go back to your lender and find out what the status is, but don't do it before 5 months. If only a portion of the loan is forgiven, or if the forgiveness request is denied, any remaining balance must be repaid on or before the 2 or 5 year maturity of your loan, whichever one you're working with. That pretty much sums it up. As we must have said about 10 times during this presentation, your SBDC offices can answer any questions that you have that we weren't able to review on the slide deck that we just presented. We will be sending out the slide deck for your reference. I believe that's true, Lillian.
Yes.
You can contact, okay, thank you. You can contact your local offices, and also when you put your information into the chat, your local offices will be giving you a call to answer your questions. And with that, I will turn it over to Lillian.
Thank you, Erika, and thank you for providing us this all the information. I know people have more questions, and as you mentioned, you can contact your local SBDC office or contact us, and we refer you to your local SBDC centers to follow up. I know there's people have some specific questions regarding to their specific business. The reason why we're not taking any live questions, so it will be better to handle individually. The recording will be available to you. So we're going to send everyone the recording and the copy of this presentation. Also, I would like to invite you for the next webinar, which is Do-It-Yourself Business Templates using Microsoft Word and Excel for PPP loan documentation, preparation, and more. The link for the registration is in the chat box right now. If you want to register, it's going to be on July 23rd at 11 a.m. And we're also going to send the link in our emails, post letter event letter that we're going to send out to you. Thank you. And on behalf of the SBDC and the Mercer County Office of Economic Development, we would like to thank you for attending today, and please feel free to reach out to our center at 908-295-5926 or also to 609-789-8364. You can also email us at regionaldirector@sbdcnj.com, as well as you can contact the County Office of Economic Development at 609-989-6555, or you can send an email to acarabelli.jr@mercercounty.org. Thank you, and we will send this presentation to you. Thank you all. Thank you, Erika. Thank you, Darren, for being here today.
Anytime. Thank you so much. Thank you.